All right, welcome back, fail-safe investors. Welcome back to Fail-Safe Wealth. Welcome to another edition of Battle of the Brands. And if you was keeping up with Battle of the Brands, the last stock analysis that I did in Battle of the Brands was on Beyond Meat. So today we're doing an evaluation of a company that Beyond Meat might be competing with, might not be competing with, might be just blowing it out of the water. Maybe I'm exaggerating, but you gotta stick around and find out. So let's go. Let's go. Okay, so welcome back to Fail Safe Wealth. In today's edition of Battle of the Brands, we're going to look at TYSON Foods. And like every video, I'm pretty much going to walk you through the company's profile. I'm going to walk you through basic valuating metrics like the PE ratio, the dividend yield, the earnings per share, all that good stuff. Get the ticker symbol, all that stuff. And then at the end of every episode of Battle of the Brands, we pretty much go through the financial statements, which is the balance sheet, the income statement, and the cash flow statement. And somewhere in the video, I'm going to tell you what I personally think of this company, whether it's undervalued, fairly valued, or overvalued. So you might want to pay attention. To start it off, TYSON Foods, ticker symbol TSN, selling for around $60, $62 a share roughly right now. Currently, that's likely to change. Any stock is likely to change every day. But we'll just say $60 to $62 a share. Market cap of $22 billion, which is pretty good. A PE ratio of about 12 and an earnings per share of about $4.97 compared to an industry average of $3.39. So they are bringing in more profits than everyone else that they are competing against. No knock at anyone else, but TYSON is a pretty big company, and they have a dividend yield of 2.68 with a payout ratio of about 34% of profit, so they still have money left over to grow the company. Now, if you haven't seen my videos on the dangers of dividends, I do recommend you go check out that video. I'll pretty much walk you through all of the things about dividends and the payout ratios, and sometimes how the payout ratio could be more than what the company even have in profits to pay out, which is what the dividend is paid out from. But TYSON Foods, dividend yield 2.68, 34% payout ratio. Now, remember I said that TYSON Foods market cap is $22 billion. TYSON Foods has a revenue of $42 billion. Take that in. Now, if you haven't watched my video on how I analyze the stock, you kind of get the point that that stock is undervalued. I mean, they're bringing in a lot of money. So if I tell you I have a company and I'm going to sell you this company for, let's be realistic, we're not going to say $22 billion, but let's say I have a company and I'll sell it to you for $22,000, and this company makes $42,000 in revenue every year, like clockwork. You're pretty much going to say that this company's undervalued and you're going to jump on it. So that's pretty much TYSON Foods. You're buying it for about $60 to $62 a share. Price to earnings ratio at about 12. That's pretty good. Like I said, for any company, anything under 20 for me is good. Now, wherever you place that valuation, that's your own personal preference. But for me, anything under 20 is what I say is a pretty good buy-in point. And since it's making about $4.97 per share, that's also quite good for any company. Now, they do employ 141,000 employees, but TYSON Food is pretty huge. And when I say huge, I mean TYSON Foods is the world's second largest meat processor. The world, though. In America, they are the first. They're behind a company called JBS out of Brazil. They're like the world's #1 meat processing company. But then it's TYSON Foods coming in at 2. Now, since TYSON Foods is the world's second largest meat processing company and America's largest meat processing company, they can pretty much dictate the prices. And they have a lot of great brands. They have brands that you know with Tyson Foods. Of course, there's the Tyson Food brands where you see Tyson on it, but then they have Hillshire Farms. They own Sara Lee. That is another one of their brands. They have a bunch of brands. Ballpark, like, you know, the hot dogs and all that stuff. They own all of those brands, so they have a lot of brands. Pretty much if it comes to any type of meat, whether it's chicken, pork, or beef, it's Tyson Foods. Pretty much, it's safe to say that if you do any of your grocery shopping at any major grocery store, even if it's not at a major grocery store, you've come across a Tyson Foods product, either seen the actual Tyson logo or at least come across one of Tyson Foods products. So I don't really have to give you the rundown on this whole entire business. Now, 40% of their revenue does come from the grocery store side of things. So just think about that. Like, they're in almost every grocery store, and that is only 40% of your revenue. So just think about that. So this company is well diverse. They have a lot of products. They pretty much process their own meats. They have everything to do with meats, and as long as the world eat chicken, beef, or pork, Tyson Foods will have a place in this world. Now, when it comes to the stock and the stock price, buying it at $60, in my opinion, I would say that that's undervalued. There's definitely some upside to that. And I'm not saying it's undervalued just based on the price to earnings ratio and the revenue versus the market cap and all that other stuff. This is a company that is a good company. And I'm going to give you some advice. Invest in good companies, because good companies do well or okay in any market, whether the market is up or down. And the price will not always reflect that, but at some point the market will realize that this company is good, and it will pretty much reflect it in the stock price. Now, prior to March of 2020, Tyson Foods was selling for around like $80 to $90 a share. So it is down from its all-time high. So buying it at $60 to $62 a share with a possibility of it getting back up to $90, which it can do because it's bringing in that amount of revenue already. And the company still have positive earnings when a lot of companies have negative earnings. Not only positive earnings, great earnings. $4 per share, almost $5 per share is excellent for any company. Now, it's not Apple's like $10 to $12 a share, but some companies only bring in like a couple cents per share. Most companies only bring in a couple cents to $1 per share. So for you to have about $5 per share, tip my hat off. Gotta say that about any company. So Tyson Foods, definitely say this is a good buy. Now, I can't just go off those numbers alone. Now, that is a good investment, but don't invest in anything until you've looked at the financial statements. So I've given you the metrics, I've given you the company profile, you know what this company do. I've pretty much told you what the earnings look like, what the price to earnings look like, what the dividend yield is, the payout ratio for the dividend, which is really good, 34%. That's pretty great for any company, and they're still paying a dividend, and the size of the company. So it's just one more thing we got to look at, and you already know what it is. To make this a fail-safe investment, we have to look into the financial statements. So let's go. Okay, so we're gonna do this how we normally do. We're gonna go through the balance sheet, then the income statement, then the cash flow statement. So starting off with the balance sheet, like I mentioned earlier in this video, Tyson Foods has a revenue from 2019 of $42 billion. So they had about $485 million, not billion, but $1 million in cash on hand. And then when it comes down to current assets, they had about $7.1 billion in current assets versus $5.5 billion in current liabilities. So that's all the liabilities due within the next 12 months or within the year 2020, as I can say, because this is from 2019, at the end of 2019. So by the end of 2020, they would have owed or paid about $5.5 billion in current liabilities. Now, when we look at the total assets versus the total liabilities, they had about $33 billion in total assets versus about $18 billion in total liabilities. Now that is great because that's almost a 2-for-1 special. So they almost have twice the assets of liabilities. Now that is great. Like I've mentioned in other videos, that is what you would want your balance sheet to look like. You would want your balance sheet to have double the assets than they do liabilities, because you have to be able to ask yourself, if this company stops making revenue for a certain amount of time or whatever, can they still stay afloat while the business either slows down or comes to a complete stop? And the answer would be yes for TYSON Foods. So when we go on to the income statement, when I look at the income statement, you got $42 billion in revenue, and then they had a net of about $2 billion. $2 billion and 22, like pretty much $2 billion. So they had $2 billion in net, meaning that's the profits. I should also mention that they paid about $36 billion to make that $42 billion in revenue. So the cost of sales was $36 billion, but that's not like a bad thing or a good thing. That's all about how you take it, what companies you're looking at, and you have your own way of like factoring that in and all that type of stuff. So like I said, net revenue of about $2 billion. They had a capital expenditures of about $1.2 billion. When you subtract that 1.2 from that $2 billion, you have a free cash flow of about $800 million. That is money that they can grow the company with, expand, pay out dividends, do whatever they want with that money. So this is a pretty solid company, and based on everything that we've seen today and everything, all the information I've given you, I want to see what your opinion on this company. Would you pay $60 if you have a really good shot at making that 60 turn into 120, 100, maybe 300, 200, who knows how high the price can go. It always depends on the excitement in the market at the time, what's hot at the time. It's a good, solid company. I will say I don't see this company going below 60 anytime soon or in the future at all, as long as TYSON Food remains operating at the level that they are operating on. As long as people are still eating meat, TYSON Foods will be around, and they will be a pretty strong company. Like I said, they can pretty much dictate the prices that they pay for like any type of meat. They're that big. So I want to know you guys' opinion. If you like the video, hit the thumbs up. I really do appreciate it. I do want to give a shout out to my whole entire Fail Safe family, everybody that's been rocking with me from the beginning, pretty much watching me grow through these videos, learn more. I'm trying to expand my knowledge. I got another book that I'm reading now called Security Analysis. It's going to teach me how to really evaluate a company, and I'm already learning from that. So I want to give a shout out to all my Fail Safe family. I love y'all, man. Hit the subscribe button if you haven't subscribed to my channel already. More videos to come. In a couple days, we're gonna give you that Battle of the Brands, that real debut of TYSON Foods versus Beyond Meat. But till then, let's get it, let's do it.